All right, let's do it. We're in the closing bell market zone. CNBC senior markets commentator Mike Santoli is here to break down the crucial moments of this trading day. Plus, another wave of earnings and overtime today. Phil LeBeau on Ford, Kate Rogers on Chipotle, Deirdre Bosa on the biggie, Amazon. Mike, I turn to you first. We did ask in our Twitter question which mega cap stock is poised for a bounce. We're going to reveal the answer now because I want your response to it. The answer is Amazon. Yeah. You surprised?
I
was kind of surprised.
From a game theory perspective, which is to say it's down most from its high. It's down like 18% off the high. It has participated the least on the way up over the last year plus. And it's reporting earnings in a few minutes. So the point being, if you're looking for a catalyst and the fact that the setup looks like it might be a little bit favorable, it makes sense there. But it is surprising in the sense that the fundamental story and how it plays through to their bottom line is murkier than it is with the likes of Meta or Microsoft.
I mean, AWS and the growth and, the returning to that is going to be key. So how would you assess so far this week, now that we're basically through this batch, we'll get Amazon, of course, and what we make of it and what it tells us, if anything?
I mean, you have some definite surrender happening in the names people thought were safe to hold through this rough period. That's part of the process. These corrections go through these waves. That being said, the wear and tear on the S&P 500 has been significant, and you've been cracking through these hoped-for support levels pretty consistently. Now, today, decent little intraday rally off the lows. More stocks up than down on the New York Stock Exchange.
Thank you, Russell.
Yeah, well, the equal weight S&P is actually like barely down on the week. It just already had its pain. So that, more favorably, you could say that's a catch-down move by the stuff that just hadn't been hit yet. The problem, I think, is trying to draw the macro message out of this market. It hasn't been a positive one for a while, despite the GDP numbers. I mean, I have been trying to make the case that the areas of the market that should have been hurt the most by slowdown fears and rates have already been hit. And then today, you see UPS, Whirlpool, you see Harley-Davidson getting taken apart on bad numbers when you might have been able to make the case that they look cheap enough already. So I think it's another wave in that process.
So more earnings, Messiah. I know Amazon's sucking all the air out of the room, but Phil, Ford coming up. I suspect most of the commentary is going to be around the strike and the the deal with the UAW. But nonetheless, what should we be looking for?
Well, look, they're going to have strong numbers. It was a solid summer, with the exception of the last 2 weeks when you had the UAW strike, but that had a minimal impact in terms of the bottom line in the third quarter. So the focus, not only for the earnings report, but during the analyst call this evening, will come down to this. When you look at the Q3 consensus, the estimate is that the profits are going to be up about 50%. But I don't think people are going to be too out of whack if the numbers are unless they're dramatically higher or lower. The UAW contract cost is what the analysts will be talking with Jim Farley about. And what's happening with EV investments? That was a major contentious issue that the UAW brought up, that they wanted to have representation at Ford's future battery plants. No doubt that question will come up during the conference call as well. A couple other things to keep in mind. Scott, this is a contract that's going to cost Ford an additional 25% for all of their 57,000 UAW workers over the next 4.5 years. And, the other question is, what happens with the strike now that it's over? How quickly will they be able to resume production, fully resume production? Some workers have already gone back to work, but it's going to take some time in order for these 3 plants to get back up and running. As you take a look at shares of Ford over the last year, keep in mind that this is a company that is trying to pivot to more hybrid vehicles as EV demand is slowing in this country.
Yeah.
Scott?
All right, Phil, we'll see. Thank you. Phil LeBeau on Ford. Kate Rogers on Chipotle. What should we look out for?
Hey, Scott. So analysts are expecting EPS adjusted $10.55 on revenues of $2.472 billion for the quarter. Comps expected to increase 4.6% compared to the guidance of low to mid single digits. Pricing, of course, a key focus for Chipotle. It's really maintained its pricing power over the last year, not seeing consumers pull back or trade down in the face of higher costs. It did confirm to CNBC earlier this month it would be taking a modest price increase to offset inflation, adding it's the first time it's doing that in over a year. The company saw some higher prices for some of its items like tortillas and dairy, along with beef last quarter, but avocado as a key ingredient came down in price, so we'll see how that impacts its margins. The stock has come off some of its highs, but it's still up about 30%. A year to date, one of the best performers in the sector for the year. We've seen companies that do have that higher price point for consumers, like a CMG, a Shack, or Sweetgreen, do a bit better in terms of stock performance this year versus others in the space. We're also, of course, going to have a CNBC exclusive with CEO Brian Niccol today after earnings next hour, so tune in for much more on all of this. Back over to you.
All right, we'll see you in overtime. Kate Rogers, thank you very much. Finally, D, Amazon, AWS, reemergence. Are we going to get it or not? Mark Mahaney, you heard him, only 50-50 chance.
That's exactly it, that we need to see a reemergence. We need to see the bottom of that AWS growth deceleration. It's been 6 straight quarters. We've seen margin contraction as well. This is the profit engine of all of Amazon. So it needs to be on the upswing. And so that's really what kind of the quarter rests on. Can Andy Jassy and his team say that we've seen the bottom and then it's going to come up? This also relates to its AI push, because a lot of this is happening in the cloud unit, that massive investment into Anthropic. Microsoft essentially told us that, you know, it can monetize this now. Customers are going to be paying for some of these tools. So the bar is not much higher for Amazon. Last thing I'll say, Scott, is that, of course, this is an e-commerce company, although that is not the profit engine. The margins are much thinner there. We're heading into the holiday quarter, so Amazon will give guidance, and that's got to be good for the street.
Well, we'll see in the next few minutes with that. Deirdre Bosa, thank you very much. I turn back to Mike Santoli. You look at tech, these losses over a 1 week period. Alphabet down 11, Meta down near 8, Intel's almost down 9, AMD down 9. Pretty astounding.
Yeah, they've become essentially the source of funds to do anything else, which is possibly to put it in cash, just because they have held up that much better. Look, they are growing more reliably than the rest of the market, but they just probably got too much credit for that in the short term. Most of them still in uptrends, the likes of Intel not so much. But I do think it'll be interesting to see what they can make out of this. Will it be 3 of these days in a row with big cap tech earnings being reported and you sell the number? That would be unusual and worrisome.
And we will find out in a very short period of time. Thank you so much. Amazon on deck. In OT, which I send it to now with Morgan and John.
A little rough, the scorecard on Wall Street, but hey, winners stay late. Welcome to Closing Bell Overtime. I'm John Ford with Morgan Brennan.
It is the busiest day of earnings season, and we will be juggling results this hour from Amazon and Intel in sharp focus as the tech sell-off accelerates. Plus, Ford following news of a tentative labor deal along with defense contractor L3Harris and consumer bellwether Chipotle.
We'll also have instant reaction and analysis and interviews with Chipotle CEO Brian Niccol and L3Harris CEO Chris Kubasik before they talk to analysts on their earnings calls. And as we await this wave of earnings this afternoon, let's bring in Bespoke Investment Group co-founder Paul Hickey. Paul, you were with us 2 weeks ago, and you pointed out that the best S&P 500 performance during earnings season comes when the net revision spread was negative heading into earnings season. Negative sentiment, as it was this quarter, but we closed at 43.27 on the S&P 500 that day. I mean, today on the S&P, we're around 41. I want to note Amazon is out. We're going through it. 41.37. Do you still think there's hope for a turnaround here in the next week or two, or are you throwing in the towel based on these revenues?
Yeah, I mean, it's been one of the worst earnings seasons we can imagine. You know, it's been very poor reactions, but I think a lot of it, the results haven't been great. I'll give you that. They've been guidance has been weak, but I mean, earnings have almost been a sideshow the last few weeks when you have interest rates and the geopolitical uncertainties. You had, before the Middle East flare-up about 2 weeks ago, the S&P was actually up on the month, and then we've been trading lower as we've seen increased uncertainty there, interest rates rising, and earnings not being the greatest. So I think earnings haven't helped, but they aren't the only factor at play here.
All right, Mike Santoli joins us here on set as well. As we do go through these Amazon results, do want to get your take on the fact that NASDAQ Composite in correction territory, the S&P 500 didn't. And I'm already going to Deirdre Bosa now for those Amazon results. Dee, what do you have for us?
I'll be quick, Morgan. Let me give you the top and bottom lines, which are a beat, a massive beat in terms of earnings per share. 94 cents versus 58 cents expected. On the revenue side as well, $143.1 billion versus $141.4 billion. Amazon shares are only up 2.6%. So let me keep diving into these numbers. We're going to want to look for AWS as well as that guidance, and I'll come right back.
All right, Deirdre Bosa, thank you. Mike Santoli, I will go right back to you. Yeah. AWS is really going to be the key here, but also online stores and what we see in terms of the e-commerce side of things and ad revenue continuing to hold up. In the meantime, ahead of this, we saw mega cap tech smacked around again today.
Yes, just a little bit of an excess of I wouldn't say complacency, but belief that these companies could remain impervious to the macro and the rate story. So a sell the news response. This market has been really unwilling to extrapolate strength today into continued strength in the outlook, whether that's for the macro economy or it's for individual earnings right now. So any kind of whisper that the growth path is wavering and they get hit hard. So I think that's the environment into which a lot of these companies are reporting. The Amazon number, even on the top line, is pretty good. You know, on June 30th, when this quarter started, it was under 138 billion for sales. Now they come in at 143. So, you know, it shows a little bit of momentum there. We'll see if they get rewarded because maybe this, okay, now you got it at 5%. But before that, you have to believe people are going to be hesitant because we remember Meta reacts to the upside on the reflex and then it sold off the next day.
Yeah, I mean, waiting to hear Dee's perspective on AWS. It does look like revenue-wise it came in line, 23.1 billion, but operating income-wise better than expected. And so I wonder, Paul, you're still with us. What's your take on the importance of the cloud results? Because we got strong cloud results for the market overall. We got strong cloud results from Microsoft, and it doesn't seem to have helped much this week.
Yeah, I mean, I think that it's a very big part of Amazon's business, so you want to see that strength, especially since they discussed that in their last earnings conference call. They were talking about seeing pickup in that. So if you saw a reversal there, I haven't been able to read the report, that would be concerning. On the retail side, though, they've also talked about how their margins last quarter had been improving for 5 straight quarters. So as those margins improve, that's a big tailwind for the business. And when you come into the last month, we've seen gas prices and energy prices declining. That's positive for the consumer, helps to offset some of the uncertainty with student loans. So I think in that respect, you want to follow the retail business just as much as the cloud here.
Okay, we're going to go back to Dee, who has more detail on the Amazon results.
Yeah, so you might call these results a little more mixed. You can tell the market's trying to digest them as well. But on that cloud front, that all-important AWS number, it is a slight miss here. 23.2 billion was expected. It came, 23.2 billion was expected. It came in at 23.1 billion. That is a year-over-year increase of 12%. Last quarter's year-over-year increase was 12% as well. So we can't really say right now that this is a bottom. We're going to ask, of course, the executives to see if they can say that, but that's going to be really critical. In terms of the guidance as well, remember, we're going into this all-important holiday season. Revenue guide is looking a little bit short. 166.62 billion was expected. They're guiding between 160 and 167 billion. So that mid-range is lower than what the street was expecting. Operating income between $7 and $11 billion. The street was looking for $8.5 billion. Shares are up 4%. So not a hugely strong beat, but again, we'll continue to digest the rest of the numbers.
Okay, Deirdre Bosa, thank you. We've got another earnings mover, Ford. Those results are out. Phil LeBeau has the numbers. Phil.
Morgan, this is Ford posting a number that is coming in shy of expectations, earning 39 cents a share in the third quarter. The street was expecting 45 cents a share. Revenues basically in line with expectations at 41.18 billion. The street was expecting 41.22 billion. Free cash flow of 1.2 billion. That's down quite a bit compared to the third quarter of last year when free cash flow was $3.6 billion. And then each of the divisions, we like to look at this because it's a good snapshot of how Ford wants to position itself for the future. The internal combustion engine vehicle business, the F-150, the SUVs, the most profitable part of the business, it posted a profit of $1.71 billion in the third quarter. The commercial vehicle division, that's posting a profit of $1.65 billion. And then there is the EV business, what they call a Ford Model E. It posted a loss of $1.3 billion. So there you see the split. 2/3 of the business making money. They're still losing money when it comes to electric vehicles. Ending the quarter with $51 billion in liquidity, and they are withdrawing their guidance pending the UAW contract offer ratification vote. Guys, the call starts next hour. Be interesting to see what Jim Farley has to say about the cost complex for Ford now if they get this deal ratified with the UAW.
All right, Phil, thank you. Mike, we can talk about Ford, but I want to go back to Amazon for a moment because, I mean, yeah, AWS was maybe a little off of expectations. I don't know if we want to quibble 23.1, 23.2, but the operating income for AWS was expected to be around $5.6 billion. It came in at $7 billion. That's a pretty significant profit beat on the most profitable part of Amazon. Also looking further down on advertising services, that beat at $12 billion versus $11.5 billion expected. So might that be why the stock is higher after
It's a pretty good mix if those are where the outperformance is happening. I agree with that. Also, it's a $1.2 trillion company, $100 million shortfall on the AWS revenues. You wouldn't really think that's a make or break with the stock already down 18%. I always point to this, though, when it comes to Amazon guidance. I mean, the guide for operating income in the quarter, $7 to $11 billion. We're a third of the way through the quarter, right? So in other words, they always manage the company to just like meet demand. We're hustling. You know, we're just going to do everything we can do, and we'll see what falls out to the bottom line. And so, you know, I think it's a decent number given the setup. It's just a matter of whether this market wants to hear it.
Yeah, and Paul Hickey, I mean, they do highlight AI and some of their AI products and services. And you have Andy Jassy in the release saying they had the strong third quarter as our cost to serve and speed of delivery in our stores business took another step forward. They say the AWS growth continued to stabilize and that advertising revenue grew robustly and overall operating income and free cash flow rose significantly. Your reaction to what we're hearing so far from this result, from this mega cap tech name in a week that we know for which the bar has been so high for others that have reported?
Well, yeah, so the bar was high coming into the week. I think it's gotten a little bit lower as we've seen the last 3 days. So Amazon, you know, the guidance, you were just talking about the guidance, 7 to 11 billion. I mean, what are we supposed to even think of that? 7 to 11 billion, you can drive like 3 trucks through that. So, I mean, it's hard to look at that. I think the pickup and improvement in the retail is a positive. What you've seen, you saw in prior quarters, that has been a drag on margins, and that is starting to improve it sounds like, from what you're discussing. The cloud, you would have expected AWS maybe to be a little bit stronger based on their commentary last quarter. So that's something that, you know, I would like to hear more about as they go into the conference call.
Indeed, we'll listen out for that. Mike, I wonder about after-hours reversals. Meta looked so strong all first hour long before the conference call, and then, I mean, before the conference call. Then during, I'm not sure what happened, but it ended up lower after hours and then trading pretty rough all day. I mean, how much do we have to worry about that kind of effect, even with names like Amazon?
We have to worry because the market's hypersensitive to any sense that the next several months doesn't have as much visibility as the market would like. When you have these stocks that have outperformed by these massive margins up until this point, it means everybody granted them the credit in advance for making these numbers and being on a growth path that was going to be a little more predictable than the rest of the market. So to me, it's that adjustment in expectations versus reality, a little bit of a crowding effect in there as well. But Amazon's down quite a bit since before Microsoft and Alphabet reported, right? So you would have thought that, again, the bar might have been lowered.
All right, well, we've got another earnings mover to tell you about. That's L3 Harris, the defense prime contractor. Those earnings are out. It looks like a beat on the top and bottom lines. Earnings coming in at $3.19 adjusted per share. That was better than the $3.03 that the street had been expecting. Revenues also beating $4.92 billion versus the $4.76 billion that had been expected. Total strong backlog growth. 49% growth in that to $32 billion. Continued demand in strategic national security-focused acquisitions, providing longer-term visibility. That's according to the letter from the CEO, Chris Kubasik. You're seeing book-to-bill 1.17 times, 16% increase in top line. That's what that revenue number represents year on year as well. I'll note shares are up about 0.5% right now. We have the CEO, Chris Kubasik, coming on exclusively to break down these results and more before he speaks with analysts on the conference call tomorrow morning. So that's coming up just a little bit later in the hour. But to shift gears here again, Paul Hickey, whether it is Ford, whether it's Amazon, whether it's L3 Harris, whether it's some of the names and results we got this morning, I think about some of these big industrial bellwethers that touch so many different end markets across so many different parts of the globe, like a UPS or a Honeywell this morning. Do we have a clearer picture yet, to your point, on where economic growth is headed right now, especially when you hear about macroeconomic uncertainty from so many of these names?
Yes, I mean, it's a very interesting environment right now. You look at today, we saw, this extremely strong GDP print, and at the same time,
Paul, I got to interrupt you for a moment. I'm sorry, Chipotle earnings are out. Kate Rogers has those numbers. Kate?
Hey there, John. So for the third quarter, Chipotle EPS coming in at $11.36 adjusted. That's a beat compared to the $10.55 estimated by the street. Revenues right in line for the quarter, $2.47 billion. Same-store sales, a beat up 5% compared to the 4.6 estimated by street count. This was due to traffic being up and higher transactions fueling its sales growth. Now, in terms of guidance, fourth quarter and full year comps being guided here in the mid to high single-digit range. This compared to the up 5.3% estimated for the fourth quarter alone there, and between 255 and 285 new openings. Once again, the stock is up about 30% year to date. It's up more than 5% right now, and CEO Brian Niccol is going to be coming up shortly to discuss the quarter with us, so much more to come. Back over to you.
Okay. Kate Rogers, thank you. We're just shifting gears here. It's like a ball that's in the air and not falling to the ground anytime soon. So let's talk a little bit more about Amazon's results with CFRA analyst Arun Sundaram. He has a buy rating and $183 price target on the stock. Arun, your response to the results we've gotten so far, especially that AWS number, the revenue number that represents 12% growth, in line with what we saw the previous quarter, and talk of stabilization there.
Yeah, hey, thanks for having me. Yeah, no, I think that AWS growth number at 12% might be viewed as a little bit of a disappointment. We wanted to see that acceleration, the same kind of acceleration that Microsoft got, but we got pretty much flat growth compared to Q2. But the offset of that was that AWS operating income was about $7 billion this quarter. It's actually the highest in Amazon's history. And AWS operating margins were 30.3%. That's actually a 600 basis point sequential improvement from Q2. So although we didn't get that top line growth number, that if we got 13% AWS growth, the stock would probably be up a lot more. But I think investors will be happy to see that AWS margin above 30.3%. That was a big positive.
Is AWS the type of business where they could have chosen revenue or operating income and they just chose operating income, or is it not that way? How should investors think about the kind of levers they can pull there?
No, I don't think it's that way. I think for the top line number, the one big headwind is customers are continuing to cut costs, optimize costs. That's been a theme we've been hearing throughout big tech. We heard that with Google, but the fact that we still saw 12% growth, I think will be viewed as a slight positive. It didn't decelerate, so that is good news. We didn't get that low single or high single digit growth that some people were really worried about. But we are seeing, new AI workloads. And I think that's what's kind of boosting this top line right now. Customers are starting to move away from cost optimization a little bit and starting to think about new AI workloads. And that's starting to have an impact on the top line. And I think that's going to be a catalyst for 2024 as well. And then on the bottom line, yeah, we're starting to see more efficiencies being rolled in not just the retail business, but now also in the AWS business. So it's a good combination to see, improving efficiencies in retail, improving efficiencies in AWS. I think that sets the stock up well in 2024, especially considering if we can continue growing operating profits, which operating profits this quarter was $11.2 billion, much higher than the expectation of $7.7 billion.
All right. Arun, thanks. Arun Sundaram. Meanwhile, Intel earnings are out. That stock is popping, I think, about 7% after hours. Christina Parks-Nevelis has the numbers. Christina?
Yeah, that's because it's been a strong beat for EPS, revenues, Q4 guidance. That's why we're seeing the strength in the stock right now. EPS coming in at 41 cents, much stronger than the streets anticipated 22 cents on revenue of $14.16 billion for Q4. Even their range is much higher than what was anticipated. A Q4 revenue range of 14.6 to 15.6 billion. Street was anticipating only 14.3. Gross margins, that was an important number to look at too, because they had been declining for so long. Last quarter was 39.8. This quarter, 45.8%, much higher than estimates at 43. We're seeing strength in client computing, a little weakness in data center revenue, which we expected given, the shift towards GPUs. But the company's saying, and I know you're reading it too, John, while I'm going through this, but the company's saying that they delivered a standout third quarter thanks to their process and product roadmaps and new foundry customers. And they reiterate they'll hit 5 nodes in 4 years. Strength, 7% in the stock.
That is an important benchmark on the turnaround attempt they're going through, Christina. Absolutely. Thank you for that, Christina Partsenevelis. Speaking of which, I'll be speaking with Intel CEO Pat Gelsinger after the earnings call today. You can catch some of what he says first on CNBC tonight, 7 p.m. on Last Call. We'll have more of that interview throughout the day tomorrow on CNBC. Paul, it was really client computing here for Intel. It was a standout. 7.3 billion in revenue expected, 7.9 turned in here. Data center and AI, as Christina mentioned, was a little soft, but the networking group also came in a bit stronger than expected. But boy, the guidance on gross margin as well here to 46.5 non-GAAP in Q4. I mean, I can't believe we're talking about wow with 46.5 in Intel. We should be talking in the 60s. But based on where they've been, that's significant, no?
Yeah, I mean, I remember a day back when Intel was the most important report in earnings season, and it's come, things have come a long way since then. You want to see, I mean, sentiment has become so bad towards the stock. Their business has been in the tubes. So the fact that we're seeing this encouraging commentary. Last week, we had Taiwan Semiconductor talk about a pickup in the PC and smartphone chips business. That's where Intel is heavily involved. So that's sort of a hint at some strength. But, hey, we'll take any strength these days in stocks where we can get it. So, when you see Chipotle, Intel, and Amazon trading up on earnings, we'll take it.
Yeah. Intel higher right now, 6.5%. Amazon 3.5%. L3 Harris 1%. Chipotle's higher. Paul Hickey, thanks for being with us. Mike, we're going to see you a little bit later in the show. Don't go too far. Chipotle shares, as I just mentioned, are up in after hours after an earnings beat just moments ago, about 5%. Let's get to our Kate Rogers, along with Chipotle CEO Brian Niccol. Kate.
Morgan, thanks so much. And hi, Brian. Thanks for being with us.
Yeah, hey, Kate. Good to be with you.
So let's start here. What is the consumer telling you right now? Are you seeing any signs of resistance to the pricing or the brand?
Yeah, look, we're really excited about our quarterly results. The growth was driven by transaction growth. And I think that's just a, outcome of having a great value proposition. And what we're seeing is every income cohort, whether it's low, medium, or high, continues to really show an affinity for Chipotle. And we're really excited about the momentum that we have in the business, and we're going to continue to push against what makes Chipotle special, which is great culinary, great customization, terrific speed, and all that combined results in just a tremendous value proposition.
And Brian, you've talked with us before about pricing levers, the ability to kind of adjust pricing as needed. The company just took price in the last month. Is that going to be it to end the year?
Yeah, we don't foresee taking any more pricing this year. And, I think the thing that's important is in the last quarter, the one we're just reporting, we really didn't take price. This growth was driven by transactions and great operational execution. And, I'm delighted to see that we're seeing consumers respond to, what I mentioned earlier, the great culinary, the great speed. And obviously we took some price, frankly, the last 2 weeks in October. And, that was really to offset some labor inflation and some minor food inflation. But we feel really good about where we're positioned, and we're optimistic about where we go from here.
Brian, it's Morgan. It's great to have you back on the show. I'm going to ask you a question that many of our CEOs in the food and beverage business, as well as in med tech business, have been getting asked over the past couple of weeks. And that is, Your take on these GLP-1 drugs, these weight loss drugs, have you seen any kind of impact? How are you thinking about that from a business perspective, if you are?
Yeah, sure. So thanks for the question. Good to see you, Morgan. These GLP-1 drugs, we're really not seeing any impact in our business. And the more we study it and understand it, frankly, I think this is another place where we're positioned really well. Our food is clean, highly customizable. So if you do decide to go on these GLP-1 drugs, you can get exactly what you want to eat, as evidenced by some of our lifestyle goals, right? Remember when everybody was talking about keto, low carb, the caveman diet? I mean, pretty much all these things, you can create exactly what you want. And then behind all of it, it is really rooted in this idea of clean food with integrity. So we're not seeing any impact from it today, but as we look out into the future, we think we're well positioned, even for those that do decide to use the drug for weight loss.
Hey, Brian, it's John Fort. I'm curious about this Aces in Places strategy that you've been pushing, making sure that you've got the employees in the store really working down that line and being efficient at key times. You mentioned labor costs. How is the tightness in the labor market and the turnover that you're seeing or not seeing in the workforce impacting your ability to really keep those Aces in Places and be as efficient as you want to be?
Yeah, well, look, we might need to put you on the line with that knowledge. But yeah, look, Aces in Place is a critical piece of the puzzle for us to execute our throughput. Our turnover right now with our managers is at the lowest level it's been in years, which is really important because that delivers stability for the team, both the leader and the broader team. And, we're seeing really good abilities to hire, and we're seeing with our growth and our story of growth for people, both personally and professionally, is resulting in better retention. So we're in the best labor position we've been in a while. And really what we're focused on now is ensuring people understand how best to execute the operating model. I was just with all of our team directors. We brought in everybody to talk about this exact thing, like how do we perform on great throughput against Chipotle's standard of excellent food with great people served really fast. We do those things right, we'll get our Aces in Places and we'll delight our customers every single time.
And Brian, one question to kind of follow up on that. I know the company's been testing out some things to improve throughput in the restaurants. The avocado, of course, we've talked about the double-sided grills. Chippy, we've had on the air several times. How is that going? How are workers kind of responding to that automation? Are they liking it? Do they think it works well? Is it speeding things up?
Yeah, look, so we're very much in our stage gate process on all these things, right? So the dual-sided grill to the avocado. The thing that our team members are telling us when we put it into our test stores is they love the automation. We call it cobotics because it really works with them to execute, whether it's morning prep like the avocado, right? Cutting, coring, scooping avocados. This is one of the things that our team members told us, hey, that's a task. If we could figure out how to automate, we would actually be better at hand mashing the guac and making sure that we have guacamole on the line all the time. But all these things are early stages. The dual-sided grill, we have that where we're testing it at about 10 restaurants. Chippy, we're doing some additional work on how you clean that better. The avocado, frankly, that's off to a really good start, but again, very much in the prototype phase, same with hyphen. And we're gonna take our time on this because we wanna make sure that it delivers on the food experience, the people experience, and then obviously the customer experience. And then we gotta make sure we get a good return on this investment. So it's in our stage gate process, optimistic about what cobotics can do for our company.
All right, Brian Niccol, thank you. And our thanks to Kate Rogers as well. Man and machine in the kitchen. Stocks up 5%, Chipotle. Solar company Enphase Energy is sinking on earnings, though. Pippa Stevens has those numbers. Hi, Pippa.
Hey, Morgan. Yeah, this stock is dropping here in extended trading after posting a mixed quarter. So EPS did beat with the company earning $1.02 per share on an adjusted basis. That was 1 penny above estimates. But revenue did miss expectations at $551 million versus $566 million. But it really is this really disappointing guidance. That's what's sending the stock 14% lower here. They say revenue in Q4 between $300 million and $350 million. That is well short of the $584 million that Wall Street was expecting. Now, during the third quarter, they said that their revenue was down 16% in the U.S. and 34% in Europe, down 34% quarter over quarter, thanks to weakness in key markets and a buildup of inventory. Of course, this does mirror what we've heard from SolarEdge, who last week announced that they were going to see a very disappointing results thanks to a slowdown in Europe. Once again, the stock down 14%. John?
Yeah, Pippa, thank you. That's rough. Up next, we're going to dive deeper into Intel's strong results. It's up about 6.5%. The growing competition the company's facing from the likes of NVIDIA and Qualcomm, when we're joined by a longtime tech industry insider, analyst Patrick Moorhead. We'll be right back.